An insider's look to the Schwab Intelligent Portfolio. My man Robert dropped $10,000 into this portfolio, and this is exactly what he's left with after they put it to work. And what you can see here is, I can't make this bigger for some reason. I'm not sure why, but let's see if I can. Yeah, it doesn't work there on the spreadsheet. Anyway, you see that fundamental, then non-fundamental. And fundamental just means it's their factoring models, all right? This is the amount, what they're trying to do in terms of, Schwab has identified some factors that they think are, hold on a second, Pablo wants me to open the door. Come on, buddy. Good boy, thanks, buddy. Here comes Pablo. So Schwab has identified some measures they think will add potential beta or alpha outperformance to their portfolios, and they're gonna. I think it's pretty interesting actually. That may or may not be right or wrong. We don't know, but the bulk of their portfolios relative to the passive is in fundamental. Fundamental is not passive. I wouldn't say it's active either. Active management portfolio is a guy or a lady who says, we got essentially it's a speculation. Fundamental isn't speculation. It's kind of speculation, but it's not speculation so much as they feel like, look, we want to buy stuff that we think is underpriced due to these measures. And the measures can be below price to book, low price to earnings, whatever. I think Schwab uses price to sales, earnings, EBITDA, is that what's called? Earnings before interest, taxes, debt, amortization, all that stuff. Net operating profits, that kind of stuff. Anyway, so they have fundamental, and the biggest holding is 26% in large cap fundamental index. Then the next one is 18.5% in the S&P 500 index. They got 15% in small cap fundamental, again, basic on their fundamental analysis that they think are the factors that are going to drive outperformance. They might be right, they might be wrong. Then they got I'll probably think the Russell 2000 or the S&P 600 for the small cap index. They got about 10% there. Then they go to the international markets. They got about 9% in a developed large company international markets, fundamental, again, with their factors. About 6% in the passive index. And again, you don't want to say a fundamental index. I wouldn't say it's certainly not passive. I certainly wouldn't think it's active. It's kind of like a mix between the two, if you will. Then they got some real estate investment trusts in here, about 4%, not huge, but hey, a nice portfolio, a nice position there. They do keep about 10% in fixed income and cash. They got some tips in there, about 3%, 2% in intermediate term U.S. government debt, and then about 6.5% in cash. And that's the bugaboo for everybody. Is they got roughly 10% in stock and cash and in bonds, and whatever. That's not going to make or break your portfolio by any stretch of the imagination. But there you go. That's pretty good to me. And I can't remember if Robert's got if he did the portfolio where he pays somebody, Schwab, so he can talk to somebody on a regular basis. I can't remember, but I think that costs $30 a month with an initial setup fee of $300. This right here, I don't think there's any fee. I think the fees is the cash and whatever the tiny expense ratio that they have on the ETFs. But Schwab uses that cash, and they turn around and loan it out for margin, and they do draw net interest income like a bank. So I think that's essentially the fee you're getting is a lack of return roughly on that 10%. But bonds are an asset. Stock, cash is an asset. Doesn't mean you should have it in extraordinary measures, but if you got 10%, it's not gonna make or break you, man. So man, I like it. I'm a fan of this for sure. I'm telling you, I'm gonna start recommending this more and more because I just think there's a lot of positive stuff here. If the passive index do well, you got exposure. If the factoring methods that Schwab thinks does well, you got exposure there too. So it's more diversified than just a passive index, that's for sure. At some point, once USA moves over to Schwab, I'll dump my money in this too. Right now, I won't, but once USA does the transition, I'll do the same thing. All right, we'll see you.